Let's talk about Rivian. So I see a lot of new investors that are looking for other EV companies aside from Tesla that they believe can go to the moon. And the question is Rivian one of those stocks you should even invest in? Let's find out. So we'll use the 4Ms, 4M Confidence Booster, to really see if Rivian is a stock worth investing in. So starting with that margin of safety part, we're going to dive into Tykr. We can see Rivian is actually on sale. Score is 61 out of 100, and margin of safety is 85%. Those are really good signs from a financial standpoint. Anything that is on sale has a score of 50 or higher and a margin of safety of 50 or higher. But let's take a closer look at those financial statements. So looking at the revenue, we can see a nice jump here in 2022. We'll talk about the reason why on that in a little bit. Then we jump to the net income. This is where there's an issue. We can see we're still in the negative. Get this, negative $0.6 billion. That's not a great sign. Let's flip to quarterly. We can see it's relatively flat. Let's jump to EPS. Now, this is where we do see a little bit of an improvement. This is why that margin of safety is looking actually pretty good. We jump from looking like March of 2022, negative 0.15, up to negative 1.89. Then I see negative 1.88 and negative 1.89 again. So not in the positives, but still making improvement there. That's why that margin of safety is looking positive. Let's jump over to that cash flow statement. We'll go back to yearly. We're still in the negative here. Jumping back to quarterly, slight decline. The cash flow statement isn't looking the best, but let's have a closer look at that balance sheet. We'll go to yearly. 2021 was looking decent. We did fall off a little bit in 2022. Jumping over to liabilities. We do see a little drop since 2020 and then an incline from 2021. Debts have been increasing. We do want to see these numbers level out or decrease. And then we have equity. So just to talk about liabilities and debts for a second, when you see increasing liabilities, typically it means you're either hiring a lot more employees, you're liable to pay payroll, or you're investing in manufacturing equipment. Those are typically biggest costs. Real estate can be another. So that might be some of the reasons why this company is seeing an increase in liabilities and debts. That's usually in a form of loans. So they're taking out loans. They need that money to buy materials to manufacture their vehicles. So that's the reason there. We're jumping back to that Tykr rating, 61 out of 100. Decent score, could be a little stronger. But overall, I'm going to go ahead and check that box in that first M. That's the margin of safety, the math part of investing. All right, now let's talk about the meaning. This is the business model. How does Rivian make money? So Rivian really sells 3 vehicles. They have the R1T, which retails US dollars at about $75,000. And they have the R1S, which retails at about $80,000. These vehicles are not cheap. There's a lot of competitors out there coming out with vehicles that are less. So this isn't exactly the easiest barrier to entry for the consumer. Their third product would be the fleet models, and those are actually not available to consumers. Actually, only one company that can use them right now, and that's Amazon. And with that in mind, right now, Rivian has an exclusive partnership with Amazon. In fact, if I jump down to the news, I put together this article here. They have an exclusive deal to buy 100,000 Rivian fleet vans by 2030. That's great for Rivian, but essentially their revenue is being propped up by one company, that's Amazon. And the problem is that word exclusive. This means that Rivian can't sell those fleet vans to anybody else at this moment. Now, Amazon does own about 20% of Rivian, and I did read here that they may lift that exclusivity, which means Rivian can soon sell, hopefully, they can soon sell to other companies out there aside from Amazon. That'd be a win-win for both Rivian and Amazon. But right now, just so you investors know, this is a limitation on how fast Rivian can scale. It can't go to other companies and say, hey, we want to sell you 10,000 or 50,000 or 100,000 fleet vans, because they can't. So that's a big limitation. And then when it comes to those EVs, that R1S and R1T, that is a big limitation with how much revenue they can actually generate. So with this in mind, the meaning, I would say very limited revenue potential compared to a lot of EVs out there in the market. There's a lot of other companies out there that have more options and cheaper options, especially for the consumer. So with the meaning, I'm not going to check that box. I'm going to put an X on that one. All right, let's jump to the competition, the Moat. Starting at the top, we have Tesla. They are on sale, scores 83 out of 100, and margin of safety of 55%. Financials look outstanding. This is a tough EV company to go up against. Rivian, sorry, you don't stand a chance in this case. Tesla's got you beat. All right, moving on. Jumping over to Volkswagen. Volkswagen is actually selling very well around the globe, especially in the EU. That ID4 is a hot little vehicle, comes in at a decent price point, and this is a tough one against as well. But when you look in Tykr, you can see the summary is watch. That score is 56 out of 100, and margin of safety is 0. So I'm looking at this stock and I'm saying, would I invest in Rivian or would I invest in Volkswagen? And based on those financials, I would actually say Rivian may have Volkswagen beat, but we need to keep our eye on Volkswagen because they have such a large global footprint. But anyway, we're going to keep moving here, see what the other competitors look like. Next up, we have Ford. They are overpriced. Score is 22 out of 100. That's not looking too good. And then their margin of safety is 45%. We like to see 50% or higher, so this shows some upside potential in Ford. They have a lot of EVs in the market, especially EVs that will come in less expensive than Rivian, but this stock here, 22, ouch, not looking too strong. So I'm still saying that Rivian, they might be coming in second place against Tesla at this moment. So pretty good. All right, let's keep moving. Next up, we have GM. They are a watch. Score is 67 out of 100. Margin of safety is 0%. Not the worst stock we see on the list here, but is this a strong stock I would invest in for long term? Probably not. I look at other EVs, especially Tesla, as a stronger investment. But so far, I'm looking at the competition. Rivian is coming in second place next to Tesla. All right, let's take a look at one more. Toyota. Toyota is on sale. Score of 78 out of 100 and margin of safety of 51%. So jumping back to Tesla, you can see we're getting pretty close. Toyota and Tesla almost head to head. So in this case, I'd say Rivian is probably coming in third place when you stack up against 5 other competitors. They're kind of in the middle. Now, in summary, would I invest based on the moat alone in Rivian? Well, I'm looking ahead and I'm telling myself, there's a lot of companies out there coming out with more EVs, especially at low price points, and they're able to sell larger volumes. So with that in mind, I'm going to give another X on the moat. In this case, it's just there's too much of a risk, too many competitors out there, not enough vehicles with Rivian. If we can see some other enterprise customers like Amazon, that would give me more confidence in this case. But right now, that's not happening. All right, we have one more to look at. We're going to take a look at that management. RJ Scaringe is the founder and CEO of Rivian. He actually graduated with a Master in Science and PhD in Mechanical Engineering from MIT and then started the company. Now, to some that might be impressive, but the problem there is he doesn't have previous business experience that's building private companies and public. It's a whole different animal at the public level, and we like to see CEOs that have built some businesses in the past. Now, I'm sure he's a great engineer, but is he a business builder? And so far, those boxes aren't being checked, and I want to give you some details around the why behind that. So first off, he only owns right now, get this, about 1.4% of the company. And what that tells us is more venture capital has come into the company and diluted his shares. And at 1.4%, that really means that the company is being propped up by venture capital dollars, not by revenue. We want to see founder CEOs that have a larger percentage of ownership. What that tells us is they only needed a certain amount of venture capital to really get the business moving. And then after that, revenue is really keeping the business afloat. So about 1.4%. That's a bit of an issue. And what also comes with that is every time you raise funds, you bring more investors into the equation. That means more people telling you what you should and shouldn't be doing. So I'm sure that board of directors has gotten bigger, and I'm sure the pressure has really elevated. And to really speak to that, as I did a little digging, I found a quote from golden.com, which has a quote from Scaringe. It says he gives almost 100% of his life to Rivian and only about 5% to his family. There's no work-life balance there. That's really unhealthy, and you can't sustain that. I don't care if you're a CEO, an entrepreneur, or what you do. If you're all out and all in on a company, you can only do that for so long, and you're going to see some negative residual effects because of that. To me, if I were an investor in Rivian, I would be afraid for that reason alone. How long can Scaringe sustain at this pace? I know there's a lot of pressure right now from investors, not only retail investors, but those venture capitalists that have invested in the company. They want to see the share price really take off. And yes, it has been increasing a little bit, but is it at the level that they want to see it at? And I would probably argue no, which means he's probably getting some really short nights of rest, maybe 3, 4, 5 hours of sleep. I could be wrong on that, but I've talked to CEOs. I've been there where the pressure cooker, it gets hot and you're getting less sleep. You're working around the clock and the pressure is pretty bad. So I'd be, again, a little afraid here just for this reason alone. Let's move ahead to that Glassdoor rating just to take a closer look. So in Glassdoor, we can see the score. The company scores a 3.4. And the CEO approval is 6.7. We like to see 4.0 or higher and 80% or higher. I do want to state this, although there's a lot of alarming factors here to him as CEO, I do have to speak to his engineering experience. It looks like he was the key engineer, really the brainchild behind this skateboard platform, which is really the underbody to the Rivian vehicle. It encompasses the battery pack, electric motor, suspension, and other key components in a single chassis. And it really makes it flexible to scale and add other vehicles to the overall structure or chassis of the vehicle. So that seems to be a really smart design. So I give him props on the engineering side. So I really think, based on his experience at MIT and some of the things he's done with the vehicles, pretty cool. I mean, this is cool technology, but from a business standpoint, he's probably in a really tough spot under a lot of pressure. Needs to get that share price up. I would not want to be where he's at. There's just no way. So in summary, I'm looking at those 4 M's. That first M checks, but the other 3, those are X's. That meaning, Moat, and management, they do not pass. I would not have confidence investing in this business. Jumping back over to Tykr, taking a closer look here. We're going over the last 1 year. There's a lot of stocks rallying right now over the last 1 year. This stock is still down 20%, but year to date, it's up about 60%, so looking pretty good. The big question is, how far can it go? Now, I will say this, with the market coming out of a recession, you have this saying, it's a rising tide lifts all boats. I know the guys on Motley Fool usually say this a lot too. That's what's happening right now. The market's rising. Those on-sale stocks, those businesses that are really good, they pass the 4 M's, they're going to do really well over the long haul. But a lot of other companies right now are also rising. But how long can that sustain? That's the big question. If Rivian starts seeing some negative earnings reports, they start missing, this might be one of those opportunities. If you're an investor, take profits, put them into another business. That's exactly what I would do. But overall, I would love to hear what you guys have to say. If you like this video, go ahead and hit that like button. If you want to see more videos like it, hit that subscribe button. If you want to check out other stocks like Rivian, you can go ahead and join Tykr for free. All right, we'll see you in the next video. Bye for now.